These are 5 stocks with massive upside, and number 1 might surprise you. Number 5, we have CrowdStrike. CrowdStrike has become mission critical. It's best in class for endpoint security, and it's a sticky business, so once the software is integrated, it's hard to move away from it. Here are some key highlights. It's adopting AI. It's using AI to detect threat even before it happens. It has best-in-class retention. It boasts 97% retention rate and a high NPS score, which is the willingness to recommend score. Platform adoption. 49% of customers now 6 or more modules. This land and expand strategy creates massive recurring revenue with high margins. Now let's look at the current valuations. The PE ratio is still expensive. It's at 100, but it's down from 200 from a few years back. The revenue growth, it's impressive. It's 20% and 24% for the next 2 years. And an EPS growth of 30%, 27%, and 25% for the next 3 years. Based on the growth trends, there is a potential upside of 30 to 35% in the next 12 months, and an upside of 65% in the next 3 years. Management is guiding $10 billion in annual recurring revenue by 2028 and 2030. So based on that, there is a potential upside of 120% and 150% from the current levels. Number 4, we have Netflix. It's the world's largest streaming service, and it has growth pillars like ads and live sports. Let's talk about some key highlights. Netflix is at an ad inflection point. The ad revenue is going to double to $3 billion in 2026. It's accounting for 6% of the total revenue with higher margins. Market share. Analysts forecast that Netflix is supposed to capture 10% of global connected TV ads by 2027. It was 3.7 in 2025. Ad tier adoption. Adoption of the standard plan with ads is supposed to achieve 40% in Q3 of 2025. Next, they are using live sports as a subscriber magnet. Acquisition and retention. Live sports was responsible for 60% of new signups across major streaming platforms in 2025. 45% of viewers who joined Netflix's NFL Christmas Day in 2024 remained active 1 year later. Let's talk about some valuation. The revenue growth is still impressive. It's 15% this year and 13% expected next year. EPS is even more amazing. It's 23%, 22%, 17%, and 15% for the next 4 years. The PE is trading cheaper compared to its historical average. It's 30% compared to 44 PE historically. So based on these projections, there is an potential upside of 50% in the next 12 months and about 100% to 110% in the next 3 years and almost 200% in the next 5 years. This is based on the moonshot goal of achieving $78 billion in total. Number 3, we have Samsara. They provide the operating system for the physical world, like trucks, construction, and manufacturing. Samsara is the leading connected operations platform. And again, once connected, it's a complex industrial workflow and becomes sticky. So here are some key highlights. Data is the new gold. Samsara processes 20 billion data points every year from these Internet of Things devices. It creates a proprietary dataset which competition cannot replicate or train AI models on. Safety and efficiency return on investment. Customers using their devices and real-time alerts achieve 37% accident reduction in 6 months, and it's 73% reduction after 30 months. Platform consolidation. 90% of large customers with 100,000 annual recurring revenue subscribe to 2 or more products, and 70% of them use 3 or more products. Let's talk about valuation. The PE is still high, It's 53, but it's down from 300 from a few years back. So SaaS companies are often valued by enterprise value by sales, and it has 9 and 8 for the current year and the next year. And revenue growth is still amazing. It's 30% and 27% for this year and next year. The EPS is even more amazing. It's 89% this year, 17% and 27% for the next 2 years. Based on these projections, here are the price targets for Samsara. There is an upside of 50 to 70% in the next 12 months, and an upside of 130 to 200% in the next 3 years, and a 250 to 325% upside in the next 5 years. Number 2, we have ServiceNow. ServiceNow is an enterprise workflow automation platform. Here are some key highlights. 2026 is going to be the year of Agentic AI. ServiceNow will deploy autonomous agents that will diagnose, plan, and execute multi-step workflows end-to-end. ServiceNow projects a world with 2.2 billion agents by 2030, and it's positioning itself as the central orchestration layer. It has the best-in-class retention. It has a 98% renewal rate, and the platform isn't going anywhere. And their customers, they love their platform. Let's talk about platform consolidation. Large customers are continuing to use ServiceNow. ServiceNow just reported a 30% increase in customers, contributing to 20 million in contract value. Now let's look at the current valuation. The forward P, it's 26. Historically, it's traded at 65 forward price to earnings. It's a joke. If you look at the PEG ratio, it's 1.1. Historically, it's traded at a forward PEG of 2. If you look at enterprise value by sales, it's 6.6. Historically, it's traded at 14 or 15. Now let's look at the projected EPS for the next few years. It's 20%, 20%, and 15% for the next 3 years. It's amazing growth for a company like ServiceNow. The forward PE, based on these projections, by 2029 will be 15. It's a joke for a company like ServiceNow. ServiceNow recently launched an AI assistant called Now Assist, and it's seen massive adoption. So based on adoption of AI and analyst estimates, there is an upside of 40 to 50% in the next 12 months and 90 to 150% in the next 3 years, assuming that ServiceNow transitions to agentic AI workflows in the next 3 years, and there is an upside of more than 200% in the next 5 years. Number 1 stock with 100% potential upside in the next 12 months, it's Rubrik. Rubrik provides a platform designed to secure, manage, and record data across enterprise, cloud, and SaaS applications. It provides protection against ransomware and cyber attacks through immutable backups, threat detection, and automated recovery. Here are some key highlights. Rubrik utilizes AI-driven threat detection and agent rewind to undo mistakes made by autonomous agents, ensuring data integrity during recovery. It has the best-in-class retention. It has a retention rate of 120%, which is unheard of. And it provides security products, now accounting for 40% of the new subscription revenue retention. Platform consolidation. Rubrik has 2,638 customers, contributing to over 100,000 in subscription revenue. That's a 27% increase year over year. Let's talk about the current valuation. If you look at EV by sales, it's 8.33. Forward enterprise value by sales, it's 7.88. Usually, SaaS companies trade around 14 to 15 enterprise value by sales, but given Rubrik's growth, it should be even higher. Talking about revenue growth, it's expected to grow around 50% this year and a 36% next year. That's impressive growth. Based on company's growth rate and projections, here are the price targets. There is an upside potential of almost 100% in the next 12 months, and 150% in the next 3 years, and 200 to 300% in the next 5 years. Thanks for watching. Like and subscribe this video.